Based on the provided data, a bearish trend is evident in both historical and forecast prices. The price consistently declined throughout February, and the forecast for March projects further downward movement. The RSI, while showing some fluctuation, remains below $50, indicating bearish sentiment. The Bollinger Bands are narrowing, suggesting a potential consolidation or breakout in the near future. A suitable strategy would be to enter a short position at the opening price on March 1st, $85,500. The stop loss should be placed at the resistance level of $87,300, aiming to limit potential losses. The target price could be set at the support level of $75,800, reflecting the expected downward trend. This strategy leverages the bearish trend, the RSI's oversold condition, and the potential for a breakout within the narrowing Bollinger Bands. Based on the provided data, Bitcoin Cash appears to be in a downtrend. The historical price data shows a consistent decline, with the price falling below the support level of $313 on several occasions. The forecast data further suggests a continuation of this downtrend. Therefore, a short position strategy is recommended. A suitable entry price would be around $295, which is close to the predicted lows for the upcoming week. The stop-loss order should be placed at $300 to limit potential losses. The target price could be set at $280, aiming to capture a significant portion of the expected downtrend. This strategy leverages the bearish sentiment indicated by the price action and the forecast data, while managing risk through a defined stop-loss. Based on the provided historical and forecast data for stacks, the trend appears to be downward with potential for further decline in the coming week. The RSI, hovering around $30, suggests the asset might be oversold, but the forecast prices indicate a continued downward trajectory. Therefore, a short position strategy is recommended. Enter a short position at the opening price on March 1st, $2,025, with a stop-loss order placed at $0.813, the highest forecast price. The target price should be set at $0.772, the lowest forecast price, aiming for a potential profit of approximately 4%. While the Bollinger Bands indicate a potential for volatility, the price action has been consistently below the middle band, suggesting a bearish trend. The support level at 78 cents remains intact, but the resistance level at $0.874 is unlikely to be breached in the near term. Given the combination of factors, a short position with a tight stop-loss and a defined target price offers the most efficient strategy for capitalizing on the anticipated downward movement of stacks. Based on the provided historical and forecast data, Ethereum appears to be in a downtrend. The price has been consistently declining over the past 2 weeks, with support holding at around $2080. The forecast for the coming week suggests further downward movement, reaching as low as $1990. Considering these factors, a bearish strategy is recommended. Enter a short position at $2,330, with a stop-loss order placed at $2,430 to limit potential losses. The target price for this trade is $2080, representing a potential profit of 12%. This strategy leverages the downtrend and the forecast price movement, aiming to capitalize on the anticipated decline in Ethereum. Based on the provided data, XRP appears to be in a downtrend. The price has been consistently decreasing over the past 2 weeks, with a significant drop in the last few days. The forecast data also suggests a continuation of this downtrend in the coming week. Considering the support price of $2.06 and the forecast lows, a good entry point could be around $2.15. A stop-loss order should be placed below the recent low of $2.14 to limit potential losses. The target price could be set at $2.06, aligning with the strong support level. In addition to this fundamental analysis, we can incorporate technical indicators. The RSI is currently in oversold territory, suggesting a potential for a short-term bounce. However, the price is also below the lower Bollinger Band, indicating a continuation of the downtrend. Therefore, this strategy prioritizes the overall downtrend and utilizes the oversold RSI as a potential entry signal while maintaining a tight stop loss to manage risk. Based on the provided data, Binance Coin appears to be in a downtrend. The historical price data shows a consistent decline, with the forecast data predicting further drops. The RSI, while currently above the oversold level of $20, has been trending downwards, indicating weakening bullish momentum. The Bollinger Bands are also converging, suggesting a potential continuation of the downtrend. Therefore, a short position is recommended. Enter the trade at the current market price, with a stop-loss order set at $605, above the recent swing high and a support level. The target price should be set at $560, representing a potential downside of approximately 10%. This strategy capitalizes on the bearish trend and the weakening technical indicators, aiming for a profitable short position. Based on the provided data, Stellar appears to be in a downtrend. The historical prices show a consistent decline, and the forecast prices indicate further downward movement. The support price of $0.283 provides a potential floor for the price, but the resistance at $0.312 suggests an uphill battle for bulls. A potential strategy could involve entering a short position when the price reaches $0.298, which is near the upper Bollinger Band and above the recent lows. The stop loss could be placed at $0.303, slightly above the entry price, to limit potential losses. The target price could be set at $0.273, which aligns with the forecast price and the lower Bollinger Band. This strategy leverages the downtrend and the potential for price volatility indicated by the Bollinger Bands. Based on the provided data, Toncoin appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data projects further downward movement. The RSI, while showing some fluctuation, remains below $40, indicating oversold conditions. The Bollinger Bands also suggest a downtrend, with the price consistently trading below the middle band. Considering these factors, a short position strategy is recommended. Enter a short position at the market price, with a stop-loss order placed at $3.60 to limit potential losses. The target price for this trade is $3, based on the forecast data and the downtrend. This strategy capitalizes on the perceived weakness in the market and aims to profit from the expected price decline. Based on the provided data, Cardano appears to be in a downtrend. The historical price data shows a consistent decline over the 2 weeks, with the forecast data projecting further downward movement. The support price of $0.613 provides a potential floor for the price, while the resistance price of $0.683 indicates a strong barrier to upward movement. Considering these factors, a short position could be initiated with an entry price around $0.660. A stop-loss order should be placed at $0.683 to limit potential losses, while a target price of $0.590 can be set, aiming to capture a significant portion of the projected downward movement. This strategy leverages the downtrend and uses technical indicators to identify potential entry and exit points. It's important to note that this is just one possible strategy and should be adapted based on individual risk tolerance and market conditions. Based on the provided data, Litecoin appears to be in a sideways trend with a slight bearish bias. The price fluctuates between the support level of $124 and the resistance level of $129. The RSI oscillates around the neutral level of $50, suggesting indecision in the market. Looking at the Bollinger Bands, the price has been trading within a relatively tight range, indicating low volatility. Considering these factors, a conservative strategy would be to wait for a clear breakout above the resistance level of $129. A potential entry price would be around $129.50 with a stop-loss placed below the recent lows around $124. The target price could be set at $134, representing a 4.5% gain. This strategy aims to capitalize on a potential upward move while minimizing risk. Remember, this is just a suggestion and should be adapted based on your own risk tolerance and market analysis. Based on the historical and forecast data for SWAY coin, the trend appears to be slightly bearish. The price has been generally declining over the past 2 weeks, and the forecast predicts a continuation of this trend. The support and resistance levels also suggest a bearish bias, with the price struggling to break above the resistance level of $3.06. Therefore, a short position strategy is recommended. Enter a short position at the market price when the price reaches $2.94 on March 1, 2025. Set a stop-loss order at $2.99 to limit potential losses. The target price for this trade is $2.75, which aligns with the support level and the forecast price for March 7, 2025. Based on the provided historical and forecast data, Aptos appears to be in a sideways trend with a slight upward bias. The support level of $5.81 provides a solid foundation for potential buy opportunities. The forecast prices suggest a potential upward movement, with the RSI also indicating a potential for buying. A long position could be initiated at the entry price of $5.92. The stop-loss order should be placed at $5.81 to limit potential losses. The target price for this trade is $6.45, based on the recent resistance level and the upward forecast. Combining this with the RSI and Bollinger Band strategies, we can refine the entry point. The RSI suggests a potential buy opportunity when it dips below $35, while the Bollinger Bands indicate a potential breakout when the price moves above the upper band. However, given the current sideways trend, it is recommended to prioritize the support level and the forecast data for entry. A more conservative approach would be to wait for a confirmation signal from both the RSI and Bollinger Bands before entering a long position. This will help to minimize risk and maximize potential returns. Based on the provided historical and forecast data for SAY, a bullish trend appears to be forming. The price has been steadily increasing over the past 2 weeks, with a strong surge towards the end of the period. The forecast data suggests this upward momentum will continue, with prices projected to remain above the support level of $0.227. A potential entry point could be around $0.245, based on the forecast data and the recent price action. A stop-loss order should be placed at $0.240 to limit potential losses. The target price could be set at $0.265, representing a potential upside of approximately 8%. This strategy leverages the positive trend and the oversold RSI levels observed in the recent past. Based on the provided data, Ethereum Classic appears to be in a downtrend. The historical price data shows a consistent decline, supported by the forecast data projecting further downward movement. The RSI, while not deeply oversold, suggests potential for further downside. The Bollinger Bands also indicate a potential for continued downward movement as the price is trading near the lower band. A suitable strategy would be to enter a short position at the market price around $18.90, with a stop-loss placed at $19.60 to protect against a potential reversal. The target price would be set at $18.50, aiming to capture a potential $0.60 profit. This strategy leverages the perceived downtrend and the oversold RSI, while using the Bollinger Bands to identify potential support levels. Remember that this is a high-risk strategy and should only be undertaken with a thorough understanding of the market and your risk tolerance. Based on the provided data, Polygon appears to be in a downtrend. The historical price data shows a consistent decline over the past 2 weeks, and the forecast data suggests this trend will continue. The RSI indicator is consistently below $50, indicating bearish sentiment. The Bollinger Bands are narrowing, suggesting a potential breakout in either direction. Considering these factors, a short position could be considered. A suitable entry price would be around $0.274, the recent high. The stop-loss order should be placed above the resistance level of $0.292, at $0.295. The target price could be set at $0.247, based on the forecast data and the support level of $0.268. This strategy aims to capitalize on the anticipated continuation of the downtrend. Based on the provided historical and forecast data for AEVO, a potential investment strategy emerges. The price has shown a downtrend in recent weeks, with the forecast suggesting continued downward pressure. The RSI, while showing some fluctuation, remains below $40, indicating a potential oversold condition. Considering this, a long position could be initiated around the support level of 15 cents dollars. A stop-loss order should be placed below the recent swing low, around 13 cents dollars, to limit potential losses. The target price could be set at the resistance level of $0.166, aiming for a potential gain of approximately 10%. Monitoring the Bollinger Bands is crucial, as a potential breakout above the upper band could signal a reversal in trend and invalidate this strategy. Based on the historical and forecast data provided, optimism appears to be in a sideways trend, fluctuating within a range. The support level at $1 holds strong, while the resistance level at $1.69 has yet to be broken. Given this trend, a strategy utilizing the RSI indicator might be beneficial. A buy signal could be generated when the RSI dips below $20, indicating oversold conditions, and the price is near the support level of $1. The entry price would be around $1. The stop-loss order should be placed at 95 cents dollars to limit potential losses. The target price could be set at $1.25, representing a potential upside of 25%. This strategy aims to capitalize on potential rebounds from oversold levels while managing risk effectively. Based on the provided data, STRK appears to be in a downtrend. The historical price data shows a consistent decline, supported by the forecast data projecting further price decreases. The RSI indicator is hovering around $30, suggesting the asset is oversold and potentially ripe for a short-term bounce. However, the declining Bollinger Bands indicate weakening momentum and suggest the downtrend is likely to continue. Therefore, a short selling strategy is recommended. Enter a short position at the market price around $0.207, the first forecast price. Set a stop-loss order at $0.215, above the recent high and the next forecast price, to limit potential losses. The initial target price could be set at $0.198, the strong support level, for a potential 5% return. Monitor the RSI and Bollinger Bands closely for potential signals to adjust the stop-loss or take profit. Based on the provided data, Solana appears to be in a downtrend. The historical price data shows a consistent decline, with the price falling below key support levels. The forecast data also indicates a continuation of this downward trend. The RSI, hovering below $30 for a significant portion of the period, suggests oversold conditions. Therefore, a bearish strategy is recommended. Enter a short position at the market price, with a stop-loss order placed at $148. This stop-loss level is chosen above the immediate resistance level and the forecast high for the upcoming week. The target price for this trade is $128, which is based on the historical support level and the potential for further downside movement. This strategy leverages the current downtrend and the oversold RSI to potentially capitalize on further price decline. Based on the provided data, Jupiter appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data suggests this trend will continue in the coming week. The support price at $0.689 provides a potential floor for the price, while the resistance at $0.795 acts as a barrier to upward movement. Considering the RSI indicator, which oscillates between $20 and $80, we can identify potential entry and exit points. A long position could be considered when the RSI falls below $30, indicating an oversold condition. The entry price would be around $0.689, with a stop-loss order placed below the recent swing low at $0.647. The target price could be set at $0.795, aiming to capture a potential bounce off the resistance level. Alternatively, a short position could be initiated when the RSI exceeds $70, signaling an overbought condition. The entry price would be around $0.795, with a stop-loss order placed above the recent swing high at $0.879. The target price could be set at $0.689, aiming to profit from a potential decline towards the support level. Based on the provided data, Render appears to be in a downtrend. The price has been consistently decreasing over the past 2 weeks, and the forecast for the next week suggests further decline. The RSI is hovering around oversold levels, indicating potential for a short-term bounce. However, the price is also approaching its support level of $3.64, which could act as a strong barrier. A bearish position could be considered with an entry price near $3.70, a stop-loss at $3.78 to protect against an unexpected reversal, and a target price of $3.45, aligning with the forecast low. Alternatively, a strategy based on Bollinger Bands could be employed. The price has been consistently trading below the middle band, suggesting a bearish sentiment. Waiting for a price touch of the lower band, around $3.55, could signal a potential buying opportunity. However, this strategy carries higher risk due to the volatility of the asset. A stop-loss order should be placed below the recent swing low, around $3.50, to limit potential losses. The target price could be set at $3.85, aiming for a move back towards the middle band. Based on the provided data, Solana name service appears to be in a downtrend. The historical price data shows a consistent decline, with the price falling below both the support and resistance levels multiple times. The forecast data also suggests a continued downward movement in the coming week. Considering this trend, a short position strategy could be implemented. A potential entry price would be around $0.118, the first forecast price. The stop-loss order should be placed above the recent resistance level of $0.132, at $0.135 to limit potential losses. The target price could be set at $0.105, based on the historical support level and the projected downtrend. This strategy utilizes the identified trend and support/resistance levels. Based on the provided data, Doge-Coin appears to be in a downtrend. The historical price data shows a consistent decline over the past 2 weeks, with the price dropping from $0.272 to $0.201. This downtrend is further supported by the forecast data, which predicts a continuation of the decline in the coming week. The RSI indicator is also below $50, indicating bearish sentiment. Considering these factors, a suitable strategy would be to enter a short position at the current market price of $0.201. The stop-loss order should be placed at $0.207, which is the high of the previous week's trading range. The target price for this trade could be $0.182, which is the lowest predicted price for the coming week. This strategy capitalizes on the downtrend and aims to profit from the potential further decline in Dogecoin's price. Based on the provided data, PEPE appears to be in a downtrend. The historical price data shows a consistent decline over the past 2 weeks, with the forecast data suggesting further downward movement in the coming week. The support and resistance levels indicate a potential for further downside, with the resistance level at $80.06 acting as a significant hurdle. Therefore, a short position is recommended. Enter a short position at the market price, with a stop-loss order placed at $80.06. This stop-loss level is set slightly above the current resistance level to minimize the risk of false signals. The target price for this trade is $0.0000720, which represents the strong support level identified in the data. This strategy leverages the downtrend and the potential for further price decline, aiming to capitalize on the anticipated movement. Based on the provided data, Shiba Inu appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data suggests this trend may continue. The RSI indicates the asset is not oversold, but the price action is below the resistance level of $0.0000150, suggesting a potential for further decline. A good entry point for a short position could be at the current market price of $0.0000141, with a stop-loss order set at $0.0000145 to limit potential losses. The target price for this short position could be $0.0000137, the identified support level. This strategy utilizes the current downtrend and the price action below the resistance level to anticipate further price decline. The stop-loss and target prices are strategically placed to manage risk and maximize potential profits. Based on the provided data, Dog with Hat appears to be in a downtrend. The historical price data shows a consistent decline over the 2 weeks, with the price falling below both the support and resistance levels. The forecast data also indicates a continued downward trend for the next week. Therefore, a bearish strategy is recommended. A suitable entry price would be around $0.575, the first forecast price for March 1st. The stop-loss should be set at $0.584, the support level on February 28, to limit potential losses. The target price could be around $0.515, the forecast price for March 3, aiming to capitalize on the anticipated downtrend. This strategy combines the bearish outlook from the price action with the potential for further decline indicated by the forecast. Based on the provided historical and forecast data, Doge-Coin appears to be in a downtrend. The price has been consistently declining over the past 2 weeks, and the forecast suggests this trend will continue in the coming week. The support price of $0.0025 provides a potential entry point for a short position. A stop-loss order should be placed above the recent high of $0.00294 to limit potential losses. The target price could be set at the next significant support level, which is around $0.0025. The RSI indicator is currently hovering around $30, suggesting the asset is oversold. This could signal a potential short-term bounce, but the overall downtrend remains intact. The Bollinger Bands are compressed, indicating low volatility. A breakout below the lower band could confirm the downtrend and provide a stronger signal for a short position. This strategy combines the bearish outlook from the price action with the oversold RSI and potential breakout below the Bollinger Bands. Based on the provided data, Near Protocol appears to be in a downtrend. Historical prices show a consistent decline, and the forecast predicts further price drops. The RSI indicates that the asset is not oversold, hovering around $37, suggesting there is room for further downside movement. The Bollinger Bands show price action contracting, indicating a potential for a breakout in either direction. However, given the overall downtrend, a breakout to the downside seems more likely. Therefore, a bearish strategy is recommended. Enter a short position at $3.07, the current price. Set a stop-loss at $3.14 to limit potential losses. The target price is $2.86, based on the forecast data and the current downtrend. This strategy leverages the potential for continued price decline while managing risk with a tight stop-loss. Based on the provided data, Internet Computer appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data suggests this trend may continue. The RSI, while fluctuating, remains below $50, indicating bearish sentiment. The Bollinger Bands are contracting, suggesting a potential for a break in either direction. A suitable strategy would be to wait for a price dip towards the support level of $6.35, which has held consistently in recent weeks. A buy order could be placed at this level with a stop-loss order set at $6.29, slightly below the recent lows. The target price could be set at $6.76, the recent resistance level. This strategy leverages the potential for a bounce from the support level while managing risk with a tight stop-loss. Based on the provided data, Injective appears to be in a downtrend. The historical price data shows a consistent decline, with the forecast data projecting further downward movement. The RSI, while not in oversold territory, is relatively low, suggesting potential for further downside. The Bollinger Bands are constricting, indicating a potential for a breakout in either direction. However, given the prevailing downtrend, a breakout to the downside appears more likely. Therefore, a bearish strategy is recommended. Enter a short position at the market price when the price breaks below the support level of $13. Set a stop-loss order at $13.30 to limit potential losses. The target price for this trade is $12, based on the projected forecast and the downtrend. This strategy capitalizes on the potential for continued downward momentum in injective. Based on the provided historical and forecast data, BTC appears to be in a downtrend. The price has been consistently declining over the past 2 weeks, and the forecast for the next week suggests further downward movement. The support price of $246 is a key level to watch, as a break below this level could signal a more significant decline. A potential entry point for a short position could be around $345, with a stop-loss order placed at $355 to limit potential losses. The target price could be set at $246, which represents a potential profit of approximately 29%. Additionally, the RSI indicator is currently below $50, suggesting that the market is in a bearish sentiment. Furthermore, the price is currently trading below the $20 day moving average, further supporting the bearish outlook. The Bollinger Bands are also converging, which can indicate a potential breakout in either direction. However, given the overall downtrend, a breakout to the downside seems more likely. Therefore, a combination of the technical indicators and the price action suggests that a short position in BTC could be a profitable strategy. The historical data suggests a downtrend in THETA network price, with a forecast for continued decline in the coming week. The support price at $1.15 reinforces this bearish outlook. A strategy based on this trend would involve entering a short position when the price reaches $1.19, the highest forecast price. The stop-loss would be set at $1.26, the resistance price, to limit potential losses. The target price would be $1.06, the lowest forecast price, aiming for a 12% return on investment. In addition to the trend-based strategy, we can utilize the RSI indicator. When the RSI dips below $20, it signals an oversold condition, presenting a potential buying opportunity. However, given the prevailing downtrend, we will utilize this indicator to confirm a potential short covering rally before entering a short position. Finally, the Bollinger Bands suggest a potential price bounce off the lower band. However, given the overall bearish trend, we will treat this as a temporary pullback and maintain our short position. Based on the provided historical and forecast data, WorldCoin appears to be in a downtrend. The price has been steadily declining over the past 2 weeks, and the forecast suggests this trend will continue. Support and resistance levels also indicate a bearish bias, with the price consistently finding resistance around $1.13 and finding support near $1.06. A suitable strategy would be to enter a short position when the price reaches $1.11, with a stop-loss order placed at $1.13 to limit potential losses. The target price for this trade would be $1.06, aiming to capitalize on the expected price decline. Additionally, the RSI indicator, currently at $37.70, suggests the asset is not oversold, further supporting a short position. The Bollinger Bands indicate potential volatility, but the price is currently trading below the middle band, reinforcing the bearish outlook. Based on the provided data, Hooked Protocol appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data predicts further downward movement. The support price of $0.176 suggests a potential bottom, but the resistance price of $0.206 indicates a strong barrier to upward price movement. Considering these factors, a bearish strategy is recommended. Enter a short position at the market price when the price touches the resistance level of $0.206. Set a stop-loss order at $0.212 to limit potential losses. The target price is set at $0.176, the identified support level. This strategy utilizes the resistance level as a trigger point for entry, aiming to capitalize on the prevailing downtrend. The stop-loss order protects against unexpected upward price movements, while the target price reflects the expected price decline. Based on the provided data, Artificial Superintelligence Alliance appears to be in a downtrend. The historical price data shows a consistent decline over the past 2 weeks, with the price closing lower than the previous day most days. The forecast data also suggests a continuation of this downtrend for the coming week. The RSI, while showing some fluctuations, remains below $40, indicating oversold conditions. Therefore, a short position could be considered. An entry price of 66 cents could be considered, with a stop-loss placed at 67 cents to limit potential losses. The target price could be set at 59 cents, based on the forecast data and the downtrend. This strategy utilizes the downtrend, oversold RSI, and the forecast price movement to potentially generate a profit. Remember, trading involves risk, and this strategy should not be considered financial advice. Based on the provided data, Polkadot appears to be in a downtrend. The historical price data shows a consistent decline, with the price falling below the support level of $4.43 on several occasions. The forecast data also suggests a continuation of this downtrend. Therefore, a bearish strategy is recommended. A suitable entry point would be around $4.70, near the resistance level, as this could trigger a short selling opportunity. The stop-loss order should be placed at $4.90 to limit potential losses. The target price could be set at $4.43, the support level, aiming for a potential profit of approximately 6%. This strategy utilizes the downtrend and the price action near the resistance level to generate a short selling opportunity. Based on the provided data, Filecoin appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data suggests this trend will continue in the coming week. The RSI is currently hovering around $40, indicating a neutral sentiment, but the historical data shows that the RSI has been consistently below $50, suggesting a bearish trend. Considering these factors, a suitable strategy would be to enter a short position at the market price around $3.15. The stop-loss should be placed above the recent resistance level at $3.41, and the target price could be set at the next support level around $2.90. This strategy utilizes the downtrend momentum and the RSI's neutral stance to potentially capture profits. Based on the provided historical and forecast data for Conflux, the trend appears to be slightly bearish. The price has been fluctuating within a range, with a slight downward bias in the recent past. The forecast data also suggests a continued downward movement in the coming week. Considering these factors, a bearish strategy might be more suitable. A potential strategy could involve entering a short position at the current market price of approximately $0.115 USD. The stop-loss order should be placed at $0.118 USD, slightly above the recent high, to limit potential losses. The target price could be set at $0.107 USD, which aligns with the lower end of the predicted price range for the next week. This strategy leverages the bearish trend and the predicted price decline, aiming for a profit of approximately 7%. Based on the provided data, Ethereum name service appears to be in a downtrend. The historical price data shows a consistent decline over the past 2 weeks, with the price falling below the support level of $20.50. The forecast data for the next week also suggests a continued downward movement. Considering these factors, a suitable strategy would be to sell Ethereum name service at the current market price, which is $22. The stop-loss order should be placed at $20.50, the support level, to limit potential losses. The target price could be set at $19.90, the lowest forecast price for the next week. This strategy aims to capitalize on the prevailing downtrend and potentially generate profits from the anticipated price decline. Based on the provided data, Avalanche appears to be in a downtrend. The historical price data shows a consistent decline, with the forecast data predicting further downward movement. The RSI indicator also suggests a potential oversold condition, which could lead to a temporary rebound. However, the overall trend and the Bollinger Bands, which show price volatility within a narrowing range, point towards a continuation of the downtrend. Therefore, a conservative trading strategy would be to enter a short position at the next resistance level, around $22.50. The stop-loss order should be placed above the recent swing high at $23.50, while the target price could be set at the next support level, around $21.90. This strategy capitalizes on the potential downtrend while managing risk by limiting potential losses. Based on the provided data, Bitcoin appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data suggests this trend will continue. The support price of $0.028 provides a potential buying opportunity, but it's crucial to manage risk. A long position could be initiated at the support level of $0.028 with a stop-loss order placed at $0.027 to limit potential losses. The initial target price could be set at $0.0265, aligning with the predicted price movement. Furthermore, the RSI indicator suggests Bitcoin is oversold, presenting a potential entry point. When the RSI dips below $30, it signals potential undervaluation and a potential buying opportunity. Combining this with the support level and the downtrend, a long position could be considered with the same entry price, stop-loss, and target price as mentioned earlier. This strategy leverages both fundamental and technical analysis to identify a potentially profitable opportunity while mitigating risk. Based on the provided data, PENDLE appears to be in a downtrend. The historical price data shows a consistent decline over the past 2 weeks, with the price dropping from $3.64 to $2.75. The forecast data also suggests a continuation of this downtrend, with prices projected to remain below $3 for the next week. Therefore, a short position is recommended. Enter a short position at the market price, with a stop-loss order placed at $2.95, above the recent high and support level. The target price for this trade is $2.65, representing a potential profit of 10%. This strategy utilizes the downtrend momentum and the support level to define entry and stop-loss points. The target price is based on the potential for further price decline in line with the forecast data. Based on the provided data, the sandbox appears to be in a downtrend. The historical price data shows a consistent decline over the past 2 weeks, with the price hovering around the support level of $0.307. The forecast data suggests that this downtrend may continue in the coming week, with prices potentially falling below 30 cents. Therefore, a short position is recommended. A suitable entry price for a short position would be around 31 cents, the predicted opening price on March 1st. The stop-loss should be set at 32 cents, slightly above the entry price, to mitigate potential losses. The target price could be set at 28 cents, based on the forecast data and the observed downtrend. This strategy leverages the potential for further price decline in the sandbox. Based on the provided data, Decentraland appears to be in a downtrend. The historical prices show a consistent decline, with the forecast prices further indicating a continuation of this downward movement. The RSI, hovering around $35, suggests the asset is not oversold, but the declining trend warrants caution. The Bollinger Bands also support this bearish outlook, with the price consistently trading below the middle band. Therefore, a short position is recommended. Enter a short position at the market price around $0.287. Set a stop-loss order at $0.296, slightly above the recent resistance level, to limit potential losses. The target price should be set at 27 cents, based on the forecast data and the current downtrend. This strategy aims to capitalize on the anticipated price decline while managing risk through a well-defined stop-loss. Based on the provided data, ENG Coin appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data suggests this trend may continue. The RSI indicator is hovering around the oversold level, indicating potential for a short-term bounce, but the overall trend remains bearish. Therefore, a bearish strategy is recommended. A suitable entry point for a short position would be around $0.112, with a stop-loss placed at $0.116 to limit potential losses. The target price could be set at $0.106, aligning with the strong support level observed in the data. This strategy capitalizes on the downtrend while managing risk effectively. Based on the provided historical and forecast data, Uniswap appears to be in a downtrend. The price has been steadily declining over the past 2 weeks, and the forecast suggests this trend will continue in the coming week. Considering this, a short position could be considered. A potential entry point could be around $7.90, with a stop-loss order placed at $8.10 to limit potential losses. The target price could be set at $6.92, which represents the support level and a potential area of price reversal. In addition to the trend analysis, the RSI indicator suggests Uniswap is oversold, further supporting a potential short position. The RSI has fallen below $30, indicating a potential buying opportunity. However, it's important to note that the Bollinger Bands show the price is approaching the lower band, suggesting potential for a bounce. Therefore, a combination of the trend analysis, RSI oversold condition, and Bollinger Band proximity to the lower band should be considered when making the final trading decision. Based on the provided data, Chainlink appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data suggests this trend will continue. The RSI is consistently below $50, indicating bearish sentiment, and the price is trading below the resistance level of $15.30. A suitable entry point for a short position would be around $15.20, with a stop-loss order placed above the recent high of $15.40. The target price could be set at $13, the identified support level. Additionally, the Bollinger Bands show the price is nearing the lower band, which could signal a potential bounce. However, given the overall downtrend, this bounce is likely to be temporary. Therefore, the short position strategy based on the trend and RSI remains the most efficient approach. This strategy aims to capitalize on the prevailing bearish momentum while managing risk with a well-defined stop-loss order. Based on the provided data, Aave appears to be in a downtrend. The historical price data shows a consistent decline over the past 2 weeks, with the price falling below the support level of $242. The forecast data for the upcoming week further suggests a continuation of this downtrend, with prices projected to remain below the current support level. Therefore, a bearish strategy is recommended. A suitable entry point would be around $195, coinciding with the forecast price on March 2nd and the potential support level at the bottom of the Bollinger Bands. A stop-loss order should be placed at $185, slightly above the historical support level of $174, to minimize potential losses. The target price could be set at $174, the historical support level, which represents a significant downside target. This strategy leverages the downtrend, support and resistance levels, and the potential for further price decline. Based on the provided data, EOS appears to be in a downtrend. The historical price data shows a consistent decline, supported by the forecast data, which predicts further price drops. The RSI indicator also suggests a potential oversold condition, with values hovering around the 30s. Therefore, a short position strategy could be considered. A suitable entry price would be around 56 cents, close to the predicted lows and the support level. The stop-loss order should be placed at $0.579, slightly above the recent resistance level, to limit potential losses. The target price could be set at 52 cents, aligning with the predicted lows for the upcoming week. This strategy leverages the downtrend and potential oversold condition, aiming to capitalize on the predicted price decline. Based on the provided data, Tron appears to be in a sideways trend with a slight downward bias. The historical price data shows fluctuations within a range, with support at $0.227 and resistance at $0.246. The RSI oscillates around the neutral level, suggesting indecision in the market. The Bollinger Bands are relatively narrow, indicating low volatility. Considering these factors, a conservative strategy could involve waiting for a clear break above the resistance level at $0.246. A potential entry point would be around $0.247 with a stop-loss order placed below the recent low of $0.227. The target price could be set at $0.255, which aligns with the upper Bollinger Band. This strategy capitalizes on a potential upward breakout while minimizing risk. Based on the provided historical and forecast data, Suncoin appears to be in a downtrend. The price has been consistently declining over the past 2 weeks, with the forecast suggesting further downward movement. Support levels are crucial in identifying potential buying opportunities. The consistent support at $0.0172 suggests a potential entry point. A long position could be initiated at $0.0172, with a stop-loss order placed at $0.0170 to limit potential losses. The target price could be set at $0.0180, aiming to capture a potential upward move. The RSI indicator, currently around $36.70, is suggesting that the asset is oversold. Historically, when the RSI falls below $30, it often signals a potential reversal. This aligns with the downtrend, suggesting that a bounce back is possible. However, the Bollinger Bands indicate that the price is likely to remain within a relatively tight range. The price is currently near the lower Bollinger Band, suggesting that a breakout is possible. This reinforces the potential for a short-term rally towards the target price of $0.0180.